Good afternoon. Whilst they're setting up, now I have two main problems. First of all, I have no video to show, unlike the last two speakers. And secondly, like Paul, I struggle and I am distracted when I see Manchester United before me. So please, you can understand if I'm heavily distracted in this presentation. I've been asked to share thoughts on rethinking the drivers. We have to go to the first slide. Rethinking the drivers of real estate capital in Africa. And there are just two main themes in my presentation. First is that, I spent a whole lot of time in my previous life going on road shows, raising capital for real estate, sitting before PFAs, sitting before main investors, both within and outside of the country. And that has taught me quite a number of things in terms of raising capital for real estate. In the past 1 year, since I started my business, which I call my retirement vocation, I've also had the opportunity of raising capital. And incidentally, we also hold the franchise exclusively for Clovercrest Global, which major funding group globally. Yeah, and we've also tried to help fund a number of projects, including real estate projects. And I've discovered that it's a whole lot easier because the fund is sector agnostic. I've discovered it's a whole lot easier to fund oil and gas than to fund real estate. So some of my experiences I'll be sharing with you. I don't know if you for that. Okay, so I basically look at, investment capital, I always say, is very rational. So you discover that they travel in particular directions. And there are some factors which pull them in those directions. So it will be interesting for us to just look at a few of those factors. So whether you are sounding sources for fund for real estate or for any other business, there are some pull factors that we must understand. Then I will look at what I usually call the 3 R's. For real estate is peculiar. So there are 3 R's that you have to focus on. You have to focus on the return, you have to focus on risk, and you have to focus on regulation. These are critical drivers of real estate capital. And, we have to always take a global perspective. So from time to time, I like to look at the GLL Transparency Index, which measures city momentum. So every year I take a look at the top 20 cities. And it is interesting this year that of all the top 20 cities in the GLL CMI, 18 are from Asia Pacific. There's no city from Europe. There's no city from the West. There's one African city, Nairobi. And that kept me thinking, And typically, 80% of real estate capital globally will flow into those cities. So we have to understand what are the factors that drive the growth and transparency of real estate in those cities. So beyond all the issues around yield, return, economy, and things like that, I discovered that technology is playing a whole major role. There's a report issued by PwC in 2017, talking about PwC 2020, real estate in 2020, which is around the corner now. And one of the major points that was made in that report is that technology is disrupting the economics of real estate. So we have to understand what drives the new framework for real estate capital, prop tech, blockchain, and all those things, unless we want to be left behind. Then I'll look at a few of the factors which I believe drive real estate. I always stress that real estate is a financing game. It's a financing play. People tend to look at real estate as the brick and the mortar, as the architectural drawings, as the moving to site, piling, building. But at the end of the day, you are only in business if you are able to continually match your assets and liabilities. I always give a joke that if you are not able to match your assets and liabilities sustainably over the long term, next year you won't be at this conference. You are either in farming or you're doing something else, certainly not in real estate. So it's a financing game. You have to have your eyes on the ball. you have to have your eyes on cash, on liquidity, because it's only if you do that you will remain. And that underscores the significance of capital, because at the end of the day, it's about you raise capital, you have to be able to pay back the capital. Whether it's equity, whether it's debt, you have to be able to pay back the capital. Now, like I said, there are some factors which have a pull effect on real estate capital. In other words, and Paul also made the point, and the point was also made there this morning. I got to learn that globally, there's 12 trillion US dollars earning negative interest. Globally. In other words, there's capital. They're looking for outlets. They're looking for investment outlets. But there are some factors they have to take into account. And for me, these are the factors which have the pull effect. So people are looking at yield. What is the yield that you will pay if you borrow this money or if they invest in this business? How secure is your investment outlet? What is the security? They're looking at security. They're looking at liquidity. One of the challenges in this industry is liquidity. And the point was made in the first panel this morning around the issue of REITs and things like that, why we have to wait to bundle existing assets. The reason is simple. If you look at the legal framework for REITs in Nigeria, it does not allow for development REITs. There are two types of REITs. You either do a D REIT, development REIT, or you do an I REIT, investment REIT. Development REIT means you go to the market, means the REIT goes to the market, the REIT raises money and then uses the money to build assets. The legal framework does not allow that in Nigeria. You have to do investment REITs, which means that you already have the assets, you pull the assets together, and you look for investors and you sell, which is what we did with our own REIT. You have to look at, people are looking at size, scalability. What is the relative size? What is the relative size of this market globally? And I agree with the point that was made in the morning that real estate thrives on the back of macro fundamentals. When we have an economy that is struggling to grow at 2%, how much can you do? How much can you do? We talk of housing shortage of 17 million. Truth is that if you build 500,000 houses in this country today, do you have people to buy? Even if you build at 5 million, I once spoke at APBN conference, and I did a simple analysis for them that if you follow the global standard on affordability, if you take a house of 5 million naira, it will take 62 years for the guy to repay. Who is the lender, who is the investor that has such patient capital? So scale is critical. The legal and regulatory framework, I'm going to say a lot about that. Governance and transparency and dispute resolution, which has been mentioned also this morning. Okay, I like to always speak to this slide. The 3 R's of real estate. Your risk. The reality of the matter is that real estate is a very risky business. And if I were a treasury manager for a PFA, I do business in a country where treasury bill sells for 15, 16, sometimes 2 years ago, it went to as high at 18%. Will I take my investment on real estate with all the risk around it? The answer is no. Why will I leave a risk-free investment of 13 or 14% and go and invest in an asset class with all the risk around it? So risk is critical. We have to de-risk the system. There's the risk of uncertainty of title. There's a whole lot of risk. Market risk, you're not even sure. This morning, people mentioned tangentially what happened in 2015. A lot of companies died because you had invested on the back of certain assumptions. You had done your investment, in my case, for example, we did an investment and we took an offshore facility. Not a lot of money, just $25 million. And at that time, dollar to the naira was 160 million. And I did 10 scenarios for my board. And I said, the only time when it will not make sense is if naira falls to 1 to 400. And I said it will not happen. But 2 years later, we went to bed one day. We woke up in the morning, just overnight. Dollar to naira was 490 naira. What happened? Everything scattered. If you're a tenant in a retail mall, you had signed an agreement on the basis of $80 per square meter per annum because you thought your naira rent was 80 times 150, 160. Suddenly you have to pay 80 times 420, 450, 480. And that was why everything scattered, So the uncertainty of the market, uncertainty of title, and all those issues are very critical. Macro volatilities. Something else that I would think is remote from real estate. Security. For most people, the largest single investment they will make in their lifetime is their real estate investment. And they don't want to make that investment when the environment is uncertain, when there's kidnapping this morning, that one, People want to make that investment when there's relative stability in the economy. The second point is return. I cannot speak too much about return. There are competing asset classes. We must understand there are asset classes competing against real estate assets. And the investor is rational. I'm just going to sit, many of us are here also, if you have money, there's TB. In 2017, TB went to 18%. You just sit down, you make your investment, you sit in the comfort of your home. At the end of every month, you just get alert. No, it will be alarm because it's a lot of money. You just get the alarm, bam, every month without doing anything. Why will you invest in somebody who will not go and buy land, go through a monile, go through approval, go through development, closure by this body, dealing with 10 regulatory agencies before you complete the project? It's a major, major issue. And of course, regulation, which I also spoke about. Now, this is where I want to anchor. And I encourage all of us to take a look at the current edition of GLL Index. Look at the top 20 cities. And look at what is driving those cities. It is, Nairobi showed up on the GLL Index for the first time in 2016. And I've taken my time to study what happens in that city, in that country since then. What are the reforms they are making? They've sorted out the issue of title. Because I always say, until we sort out the issue of title to land, you cannot get the level of real estate investment that will move the cheese in this country. Today, there's no point in the chain that you can beat your chest that your title is unassailable. And that is a problem. 6 months ago, there was a judgment on Agidingbi. I don't know who knows Agidingbi. The whole of Agidingbi. A 30-year-old case. Suddenly there was a Supreme Court decision. 2,000 plots of land are involved. It has changed hands several times. And suddenly you wake up. Yesterday you were the owner of this land. This morning, Supreme Court says it's another family. And then there's a problem with all the industries in Agidingbi. 2 years ago, it was a wire, the whole of a wire. So we need to sort out the issue of certainty of title. As an investor, and I always say, take a value chain approach. Look at the entire value chain. Look at the critical stakeholders in that value chain. What are the things that matter to them? The financier, the developer, the buyer, every stakeholder. Title is critical, and we need to sort that out. So we take a look at the GLL index, look at what is driving, look at all those cities, what is driving them, and how they have managed to get to a level that they are able to attract the kind of capital. Let me quickly round up by speaking to what I think are the drivers as we think real estate capital for Africa. Number one, you have to think macro. You cannot divorce real estate from the rest of the economy. Real estate always thrives on the back of macro fundamentals. So at any point in time, and real estate typically follows infrastructure. Look at anywhere in this country where government has made a little attempt to develop the infrastructure. What happens immediately? Look at what happened in the Lekki corridor. There was a time that once you leave Morocco many of us are old enough to know, after Morocco, everywhere was bush. And then they walked on the road. Look at what happened to the Lekki corridor. But we have not maximized the opportunity in that corridor. So the macro economy is very critical. Exchange rate and all those other issues. The regulatory framework is a critical driver of capital. I had sat on roadshows. I remember I had an experience in Europe. I had gone, we were trying to sell a particular company. I prepared my presentations and I entered the room. I tell you, for out of a 2-hour meeting, for 1 hour, 40 minutes, I was busy defending Nigeria. This happened in your country. That happened in your country, We spent like 20, 15 minutes to discuss the main presentation. And you can imagine, before I left the room, I knew what the answer was, clearly. Because people are concerned about the regulatory environment, about policy consistency, consistency of policy. Professor Motola once said that if there was any award for policy inconsistency anywhere in the world, Nigeria will win the best prize. All around you, businesses want certainty. You want to be able to take decisions, in a reasonably predictable environment. I don't want to just wake up in the middle of my project, something has changed. Look at the issue of VAT. The legal regulatory framework for VAT has not even been sorted out, yet it has been factored into 2020 budget. Who does that? And typically, go and calculate the impact on your project. You can't imagine. So if you have a project now, you have already signed contracts, you have sold to off-takers. Now you have to factor in the 2%, and that's the reality. The political environment, I can't say too much about that. You don't just look at the economics. People look at the politics of the environment. What happens? They look at government. They look at the language, the body language of the government. They look at the political stability. You want to inflow a whole lot of funds into any economy, look at the stability, you look at all the issues around it. You look at the cost of capital. The cost of capital. Because even when you want to bring in offshore funding, you need to have your counterpart capital. And a whole lot of time, the counterpart capital is only available at such high rates. I want to speak to technology. Because sometimes, and I'm happy, the next session is on technology, and I'm looking forward to it. There's a whole lot which has happened in this space, and there's a whole lot which is happening. If you look at those 20 cities that I show, about 11 of those cities are on that index because of what is happening to technology, how they have imputed technology into the process of real estate. As Philippines and Vietnam, for example, their cities are on that index because of what has happened to tech hubs, startups, and things like that. So it is clear to me, therefore, that when you're thinking capital, you don't just think about the traditional principles alone. You have to be a bit more futuristic. Think about the impact of prop tech, the impact of blockchain. How will they affect real estate? And today, if I'm pitching for funding, you cannot just go to pitch for funding in one of the main capital cities in the world and you just go with your traditional case without going with issues around sustainability, inclusion, environmental analysis, and all those things. I hope with these few words of mine I've been able to convince and not confuse you. Thank you very much, and God bless.